Franchising made simple.
Welcome to the latest episode of Fran Simple, the podcast designed to make the concepts of franchising simple. I'm your host, Mark Vandergrift, and with me is the president of FranSource and all-time franchising expert, Steve Vandergrift. Steve, welcome.
Well, thanks, Mark. It's always great to be here.
Good. We have a fun topic today. You know, I watch a lot of home shows on flipping homes, right? Well, there's a term getting a lot of attention in the franchising world now called the franchise flip. So I think we're hearing that it's like the next big wealth strategy, which is that like the next get rich quick scheme? I hope.
Definitely not.
It's probably overhyped, but tell everyone, what is it and why are so many people talking about it?
Well, at the basic level, the franchise flip is really simple. You build or acquire a franchise, you improve the performance, and then you sell it for a profit. What's really different now, and it's like multi-unit franchising, which on our previous podcast we discussed, that has been growing rapidly over the last 20 years, probably upwards of 50% plus of franchise units are owned by multi-unit operators. So what's different now with the franchise flip is it's all about intentionality, I like to say. People aren't just buying franchises to own them long term. They're thinking more like investors from the very beginning.
Okay. Well, why now? What's changed that's making this strategy more popular?
Well, a big part of it is the scale. Franchising has really matured into a massive asset class. And so just a little statistics, according to the IFA's 2026 Franchising Economic Outlook Report, the number of franchise units will grow from approximately 833,000 to 845,000, which is an increase of 1.5%. And then the output has also increased. It's expected to rise from 907 billion to 921 billion. An increase of 1.6%. And then the total franchise GDP is expected to grow from 1.8% or by 1.8% from 550 billion roughly to 558 billion. So when an industry gets that big, you naturally see more buying, you see more selling and repositioning of assets, similar to like real estate.
So this isn't just hype, there's real activity behind it?
Oh, exactly. Again, the number of franchise units that change hands every year is increasing, and it's certainly growing in 2026. So that's a clear signal. Franchising isn't just about starting a business anymore. It's about scaling them.
Okay. So, I get to watch these TV shows on flipping houses. Walk us through what a franchise flip looks like.
Well, I like to think of it as really a three-step play. Number one, you acquire or build the unit. Number two, you improve the operations, the staffing, the marketing, the margins, and then you sell it at a higher valuation. And some people are buying underperforming units and simply fixing the issues. Others are building new locations, operating them, and then, of course, selling them once they're profitable.
So, okay, my understanding of a franchise, bear with me here, is that it's an operational system that should be optimized, right? When you buy it. So when you say there are issues that need fixed, what does that look like? Is it just the franchisees not following the system? So they buy it because it's at a low point and then the franchisee comes in and follows the system all of a sudden?
Exactly. I mean, at the end of the day, it's less about distressed assets and more about creating enterprise value quickly by improving the operation. And it's usually the franchise operator's issue, the original operator. And the flipper is coming in to fix that and then obviously scale and sell.
Okay, so it's not something necessarily that's broken. It's not like buying a crappy house.
No.
It's building something.
That's exactly right. In other words, the system works. The operator isn't following the system. So
what's fueling the trend? Why are more people doing this?
Well, excuse me, there's four big drivers, I think. The first is low risk. They are stepping into a proven system of operation. The existing operator, may not have done it properly, but they know that the flipper knows it's working right. And then, of course, there's the buyer demand. A lot of people do prefer buying cash flowing franchises instead of starting a franchise from scratch. They don't want to go through site selection, construction, etc. And a third is naturally capital. When we're in an uncertain market, investors like to
Mhm.
have a predictable asset, and this is certainly one of them in a proven system of operation. And then finally, there's just more sophisticated owners. Multi-unit operators and private equity groups are treating franchises like investment portfolios now,
Yeah.
not just jobs, not just businesses.
So you're telling me I should probably be on the lookout for a new TV series called The Franchise Flip.
That's right. It would be a great series without a doubt. We'll host it, Mark.
Okay. Well, I mean, it's starting to look like that. It looks like, I don't know some of the food cooking shows, but they go into a restaurant, they fix the issues. What's the chef's name that does that? But
Oh, yeah.
um, he goes in, fix a restaurant, just like the real estate. So you're kind of saying this is looking more like real estate or even private equity because they're doing that a lot. Is that right?
Exactly. Exactly. It's ultimately becoming more transactional, more strategic, and of course, more data driven.
Okay. So if someone's thinking about this strategy, I already know people locally that are trying to do the, flip thing on real estate and housing and become the next big Chip and Joanna Gaines. So this is a little bit more new than that. If someone's looking into this strategy, where do they look? It's not like you can go to Real Estate Magazine and go, "Oh, I'm going to buy that house. It's in foreclosure."
Right. Well, there's really three big categories, I think. The first is home
Okay.
services. So you think HVAC, plumbing, restoration, cleaning. These are needs based and recession resistant. And the US home service market is massive, but it's highly fragmented, which creates a lot of opportunities to improve operations, scale, and then exit. Health and
Okay.
wellness would be the second category. Think fitness, recovery, longevity. This category keeps growing, and we read about it every day because people are prioritizing their health and how they feel. Boutique fitness alone has already seen steady post pandemic recovery, and they have strong unit economics in the right models. Obviously, that's part of it. And then finally, I would say B2B services. So, staffing, commercial cleaning, business services. These franchises typically have lower overhead costs, recurring revenue, and they typically are easier to scale across multiple units for those reasons.
So do I go to franchiseflip.com or where do I find these
Yeah, yeah,
things?
yeah. We better snag that now.
Okay. Sounds good. Well, what about restaurants? I don't think you mentioned those.
Well, restaurants can certainly work, but it's a little tougher. You really need simple operations, strong margins, and ideally off premises models where food's prepared on site but consumed elsewhere, which is really all about prioritizing convenience over in house dining. We like to say in the restaurant industry, complexity kills a lot of food concepts.
Hmm. Do you see that's because of staffing or is it just the complexity of the
It
operations?
can be the complexity. So, as an example, smaller menus. Let's not have 25 pages of menu items. We're dealing with increased food waste costs and things like that. You want efficient operating systems. Some restaurants are very heavy when it comes to the operation itself, and it just requires a lot of expertise. So, the simpler the restaurant, the better the opportunity.
Okay, so you're telling our listeners if they're looking into this, look at category first, right? And then brand second.
Exactly. The model definitely matters more than just the logo.
Okay. So give us an example. What does it look like in the real world if we were to go to franchiseflip.com and I found an opportunity? What does this look like? What's the next step?
Well, a good example is the home services industry. So, restoration brands like ServPro or similar
Mhm.
concepts. There's operators who come in, they buy an underperforming unit or units, as the case may be. They professionalize the sales process, they tighten the operations, and they grow revenue significantly, sometimes doubling and even tripling over a few year period. Once that happens, those businesses become very attractive to larger multi-unit operators or private equity groups, and they typically sell at a premium price. So there's one real world example.
So they're not just fixing, they're scaling and then exiting.
That's right. It's really value creation, not just a turnaround.
Okay. Which is what private equity is basically trying to do then. So
Exactly.
it is that model then.
Yes.
Okay. So what's the appeal here? Why do people love this idea?
Well, really, there's three things. The first is speed. You can create value faster than long term ownership. The second is focus. It forces operational discipline and consistency in the operation itself. And then the final one is flexibility. You can redeploy capital instead of being tied to one business. And this really fits, I believe, how modern entrepreneurs think: build,
Mhm.
scale, exit, repeat.
Okay. What what's the relationship look like with the franchisor? Do you see it creates any kind of tension? Like, let's say this franchisee over here, I'm buying it, right? And I enter the picture and the franchisor is looking at it as, oh, they're going to try to fix me as well and tell me where operational challenges come. What's going on there? What do you think the franchisor's mind is when they see this happen?
Well, believe it or not, some are really leaning into it. There are
Okay.
brands now, especially in the home services and fitness industries, that are building literally resale pipelines and even helping, facilitate the transactions. They know that strong resale activity, it keeps the units open, it attracts better operators, and it supports higher overall brand valuation. But
Okay.
conversely, some franchisors are careful. They don't want a system full of short term operators. You don't want your
Mhm.
entire franchise network to be flippers. But there's a place for it in most
So
systems.
they meet with a poor performing franchisee, go, hey, Bob, you're not cutting it. I got someone that's interested in selling or buying the business.
That's
Let's
right.
make this happen. Is that
That's
it?
right. That's right. It's for
Okay.
the benefit of both that existing operator and the system itself, the brand itself.
Okay. So going back to the franchise flip and the franchisee, let's balance it out because I always want to know what's the risk? What can go wrong here?
Well, a lot, depending on the operator. First of all, you need strong execution. The buyers pay for results, not potential.
Okay.
And the timing really matters because market conditions impact, obviously, the valuations. And then finally, it takes capital, as we've discussed. You have to invest typically before you exit. And honestly, not every brand is flippable. Some markets are
Hmm.
saturated, some systems just don't command strong resale values.
Well, I assume these franchise flippers know what to look for. I mean, it's like going into a house and saying, this is just not recoverable, or I see the bones are good, but the aesthetic is awful. So
Hmm.
that's kind of their perspective walking into a franchisee.
That's right. And obviously, flippers are doing a tremendous amount of due diligence.
Okay. So this isn't passive investing. I mean, you don't just lay money on the table and go, okay, I hope this works out. Give us some insight on that.
Yeah, it's definitely not passive investing. This is
Okay.
active, operationally driven investing, is what we like to say.
So do you think this is something people should be pursuing?
Well, they should understand it, first of all. You can't
Okay.
go blindly into this ultimately, and it's certainly not for everyone. So at the end of the day, the people that are winning by flipping, they're picking the right category, they're executing at a high level, and they're building a business that someone actually wants to buy. That's the
Hmm.
difference between speculation and strategy.
Okay. So I'm evaluating this. It seems like a good way to go. What makes a franchise more flippable than another?
Well, I believe there's really three key things. The first is strong unit economics. It has to have those strong unit economics. Then there's multi unit scalability. Can they scale across multiple units? And finally, being confident. And obviously, you can't always be 100% confident, but you need to be confident that there's a clear buyer pool on the back end when you're flipping. And if those three exist, you have a good opportunity.
So you think this is a trend or do you think it's here to stay?
Oh, it's here to stay, but again, it's not for everyone. And it's a strategy. And like any strategy, it works when it's aligned with the right operator, the right brand, and obviously in the right market.
Um, I guess a logistics question for you before we kind of wrap things up here.
Hmm.
Is this, does a franchisor have to approve the acquisition of one of its franchisees?
That's a great question, and the answer is yes. A franchisee can elect to offer their business for sale. The franchisor, through the franchise agreement, has a right to obviously do their due diligence and evaluation of that buyer. And if they don't feel comfortable that they're going to be able to operate properly, they can say no. And franchisors also have the first right of refusal. So typically, if a franchisee receives a bona fide offer, the franchisee has some period of time to either say, yes, you can sell it, or no, we're going to purchase it at that price.
So you always talk about the criticality of the sales process.
That's right.
Does a franchise flipper, so an investor in an existing franchisee, do they have to go through the same process that a new franchisee would go through?
To some extent. Now, you're probably going to skip maybe a step or two because they're not a new franchisees, never owned a business, etc. But yes, you're certainly going to require them to complete an application. You certainly, if you have discovery days, which we highly recommend, where prospective franchisees come to meet the owners, the management team, get a taste of the day in the life of a franchisee. Those are all things that, yes, that is part and parcel to even flippers. You really want to evaluate them just like you evaluate any prospective franchisee. Great question.
And when they're meeting with them, what is the confidentiality in terms of talking about the franchise location or locations that they're looking to acquire? Can the franchisor share everything, like Bob did this and Bob does this and Bob doesn't do this well and Bob doesn't do that well? Is it, I assume full transparency is allowed, or is there confidentiality in some regard?
Well, it depends on the deal, Mark, honestly. Some will require non disclosures, et cetera, relative to that acquisition. Ultimately, the flipper is responsible for doing their own due diligence. So I don't particularly see where franchisors are, quote unquote, throwing that franchisee under the bus. But
Mhm.
again, if this is truly a qualified flipper, they know the due diligence that they have to do.
In that situation where you said franchisors are actually developing a funnel for this,
Mm-hmm.
can a franchise flipper approach them independently of that franchisee, or do they have to notify the franchisee that there's somebody looking at them before they have the conversation?
Well, typically what's going to happen is that flipper is probably going to reach out to the franchisor. Hey, do you have anyone looking to sell their franchise or franchises? Do you have any underperforming franchises that you'd love to have a new operator for? So, really, the first step is typically going through the franchisor. Franchisor then would initially coordinate with that franchise operator, see if they have any interest. Unless they're in major violation of their agreement, the franchisor really does not have cause to remove them as a franchisee. But the franchise owner themselves, the existing owner, may say, yes, I'd love to have the opportunity to sell.
Okay, good. That seems like a pretty complete coverage of the franchise flip. I'm sure there's a lot of gnat hairs to talk about, but as always, give us that one single takeaway that you'd like to share with our listeners today about this particular trend.
Well, I think it's important that the listeners understand that franchising isn't necessarily just about owning a business anymore. It's about building an asset. And the people who understand that subtle shift, they're going to have a big advantage when we're talking about franchise flipping.
Okay. I'm going to extend the conversation a little bit because we do know of an existing franchise that is flipping right now, in
Hmm.
essence, even though it's a franchisor flipping to a franchisee. What what kind of financial incentives can be provided, or additional investment that is made by the existing entity to make the sale more attractive?
Okay, now there's a slightly different situation. The franchisor, and we have a lot of clients, they operate multiple locations. Once we launch their franchise, they're actively interested in maybe selling a few of those locations. And
Uh-huh.
sometimes that does come. In one particular current case that we have, the franchisor was basically going to invest in that location. It was one of their first locations. They wanted to get more equipment in there. They wanted to make it flow a little bit better. They felt that they could actually do higher levels of revenue. And so ultimately, they basically shared with the potential buyer that they were willing to invest X amount of dollars to that cause to really allow that franchisee to hit the ground running. So that work is going to be done literally as part of the transition from a franchisor owned, or we like to say a corporate affiliated franchise location, to an independent franchisee.
Okay, so that wouldn't qualify under the franchise flip trend that you're seeing.
No, it's more the franchisor selling off units. And, that's
Okay.
occurred since the beginning of franchising and it's going to continue. But yeah, a franchise flip is an outside individual coming in with the idea they're going to basically take over underperforming units, they're going to fix the operation, and then they're going to sell it. They're going to exit.
Very good. Well, let's wrap up today's episode of Free and Simple, where we talked about franchise flipping. What a thing a term I would have never thought of. So, as soon as we're off here, make sure you go look for that domain. We want to
You
see if
got
we
it. That's the first thing I'm going to do, Mark.
Well, thanks for joining us, Steve. And as always, thank you to our listeners for joining us. Please like, share, subscribe. And we really hope that you're enjoying our initial Free and Simple podcast. We have our first few here in the bag. So we hope you'll join us again as we seek to make the concept of franchising simple. And until next episode, may your business expand through the power of franchising.